Good morning, I'm Joe Brusuelas, Senior Economist at Bloomberg LP with your Bloomberg Economic Brief Morning. Cup of Joe. Okay, overnight we had a successful Spanish auction of 2- and 10-year debt. The auction was oversubscribed. It's not clear yet who was in buying. We want to make sure that it wasn't just the European Central Bank intervening in capital markets. So we're going to reserve judgment on the relative merits of those particular auctions. However, investors do seem to be a little bit more optimistic on those results. The S&P 500 looks to open up 1% once we get going here in New York at 9:30 a.m. this morning. We also seen some decent earnings earlier this morning. We're going to see 46 different companies in the S&P 500 issue first quarterly earnings today, so that's going to be a big factor in global asset markets today. Now in the U.S., we are going to see a number of top-tier employment reports at 8:30 a.m. We're going to see the initial jobless claims for the week ending March 14th at 9:45. We're going to see the Bloomberg Consumer Comfort Index, followed quickly at 10 a.m. by the Philadelphia Fed. For the month of April, we're going to see the existing home sales for March and the leading economic indicators for March. Okay, I want to focus quickly on initial jobless claims and the existing home sales because they're the two most important reports that are going to be released this morning. Okay, I expect claims to revert back towards their 13-week moving average of 370,000. However, there is some upside risk on this report. Now, 9 states ended unemployment claims for the week ending April 14th, and another 5 ended extended unemployment benefits programs. Now, this will likely introduce an upside bias into the data, and we want to watch that closely. Now, the second thing is, as we've talked about this consistently, the shock to the labor market that we saw in late 2008, 2009 has distorted the way in which we're able to collect the data in a universe of 131 million workers. Thus, if we're going to see another mid-year swoon in terms of overall output and hiring, initial jobless claims are going to be the tip of the spear. We have seen a secular move upward in claims over the past several weeks, and it just can't be discounted due to issues surrounding the Easter holiday. It does look like it's a little bit more sustained and perhaps a little bit more pronounced, so we'll want to watch that closely. This is your leading indicator, and you're better off looking again at that 13-week moving average rather than the 4-week moving average. Okay, existing home sales, they're going to fall hard today. You want to look just not at the sales number, you want to look underneath the report at supply, at price, the level of cash transactions, and distressed home sales. Look, we got 4 million shadow inventory, and 13.5 million people are near or underwater, or have negative equity or near negative equity on their homes. I'm Joe Brusuelas. That's your Bloomberg Economic Brief Morning Cup of Joe.